So we got to talk about Bitcoin. I already know you guys see 103K right now. We did some really good numbers in Bitcoin earlier. So just to kind of recap what we've done here inside Bitcoin over the past 7 days, you can see we actually almost got to 105K, got all the way up to 104.7K, almost got to 105, and our all-time high is at 108K. So if you see 108.7K is our all-time high, we got to talk about what we have to do to reach the top here with Bitcoin, and what we got coming up next. Like we're really going up inside the crypto market. Everything was going up recently. All the altcoins were shooting up. Right now is like that pullback time. So right now we're waiting for the next rise, the next pump, because as you can see, everything 34% in the last 7 days. Like that's crazy. And there's almost all the altcoins are like that. Some altcoins aren't as good as others, so they're not doing as good as others. But for the most part, most of these altcoins are doing absolutely crazy numbers. So what I really want to talk about today is what we're about to see coming inside of Bitcoin, because we've had that little pullback, right? But what comes after the pullback? And that's really what I want to discuss here. Anyways, remember, I'm not a financial advisor. None of this is financial advice. Let's hop straight into it. So first things first, right now we are inside of a new channel. So this channel, we've pretty much started this channel over here on the 9th of April. We've been inside of the same channel since then. And it's hit the channel multiple times. It's hit the trend lines multiple times. So you can see it's had multiple waves in this channel. It had this wave 1, 2, 3. We've had 3 waves in here. We've hit multiple times on this channel. So this is definitely a channel. It's not like we're just making up random lines, right, and random patterns. Like this is definitely a pattern that we're in right now. So right now we're kind of trading sideways, consolidating a little bit, coming back here towards this trend line. But once we reach this trend line, let's say even if we go down here to touch the support around 100K to 99K, we're probably going to end up seeing a bounce, if not breaking here. You can also see on the MACD how we're almost pretty much oversold. But then you can also see, or overbought, I mean, you can also see here how there is some selling going on. And you can see these bullish candles going down here on the MACD. So that is another point. Also, we're a little overbought here on the RSI as well. And actually, when you look at the RSI can stay overbought for a while. And even after it leaves that overbought area, the volume can still be increasingly bullish. So it doesn't necessarily mean that we're about to crash just because we're a little overbought on the RSI. You could see it overbought for a little while, and then you can also see it's still increasing in price as the RSI goes down, because it can be all buying pressure and all buying volume as opposed to selling. So that has happened before back here when we've seen the RSI going down and decreasing, but we've seen the price simultaneously going up. You did see a lot of swings up and down on the way up, but it still went up ultimately. And then eventually it kind of stopped that and then started to actually pull back. But nonetheless, we're doing pretty good. But what you really want to pay attention to here is what everyone's saying. Everyone's talking about a double top. And they're talking about the double top that we had back inside of 2021. If you come back here and you look at 2021, you can see we had a double top. But what people need to understand is when we have a double top, it doesn't necessarily have to be at the same price. As you can see here, we were priced at a whole different price as opposed to when we topped the second time. So we topped up here at 64.9K, somewhere around there. And then we topped up here at about 68.6K. So that's a $4,000 difference from here to there. And it might not seem like a big deal, but it kind of is. It kind of is a big deal to have like a $4,000 difference there. And actually, if you look at this, let's say from here to here, that's it's not much. All right, it's about 6%. Okay, that was about 6% in gains right there. So a 6% height difference inside of the double top. So hypothetically speaking, let's say we got that same 6% height difference or price difference. Let's just say that same 6% price difference now going up here to the Fibonacci retracement would actually be 9%. So we could have a 9% price difference to our double top. And that's just kind of showing you guys like the difference between 2021 and now. There's obviously more money in the market. So if it were to have a double top, obviously there's more money, so then the double top could be a little bit higher. but it would still be a double top. So that's something that people have to kind of realize here. So that's still possible. It is what it is. But if you come back here, you look at it, what everyone's saying, like everyone's talking about this double top. So it's not like I'm just kind of pulling it out nowhere. Like you can go to all these articles. Everyone's talking about a double top, right? Let's go over this one with CoinDesk first. So this is what CoinDesk says. Bitcoin may be headed towards a 2021 like double top. Bitcoin has changed a lot in 4 years, distancing itself from shady centralized exchanges like FTX and emerging as the plat du jour among institutional investors. However, this month's drive back into six figures amid cooling, blah, 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 blah. All right, they're just going to kind of big up Bitcoin. But remember the all-time high of 65K in 2021 in April. That's what they're talking about. And then they said Bitcoin eventually bottomed down at 28K just 2 months later. So it only took 2 months for Bitcoin to go from 65K to 28K, hence the double top. So that's actually a pretty big thing that we want to focus on here. So if you look at that, first Bitcoin went all the way down to 28K. So I just want to let you guys take this in a little bit, right? Look at this. Boom. 65K down to 28K, right? So that is about, if you look down here, that's about 55% drop. That's a 55% drop. Bitcoin went down 55%, okay, from all the way up here, all the way down there. And it took approximately, let's just say 100 days right here. And that's what it says on there. So about 100 days, it took Bitcoin to go down 55%. Now, we already had a drop, right? How much was our drop previously? Well, let's go ahead and take this and look at it. So boom, look. So this drop here, this drop was a little bit quicker. This drop took us 80 days. So 80 days we bottomed out. Now, some people might say, oh, we already had a double top. You can look over here. It topped out twice, so it's already double, and then it went down. That was the bear market. And no, like bear markets last way longer than this. Double tops are usually way more spread apart than this. They're usually like this. They're this much spread apart. If you actually go back here, you can see the distance is almost the same distance. It's very much the same, actually. And yeah, the bull market lasted a good little minute. It lasted from about the 10th of November all the way, or the bear market, all the way down to December of 2022, pretty much, let's just say January of 2023. So November 2021 down to January 2023. That's how long that bear market lasted. And then boom, it just started going crazy. So that bear market lasted a good year and a half. So, or a little bit less than a year and a half, actually. So if we were going to say, hey, the same thing could happen now, we got to think about it. Like, look, about 30%, right? The double top went down about 30%, and we have more money flowing inside of the crypto market. So obviously, things are going to be a little different this time. So now what we're looking at here, if this is a double top, we could be topping out here at this Fibonacci retracement at 119K. And I've been talking about this for a while. And it might go a little bit above the Fibonacci retracement, just like how we did back here. We went above that Fibonacci. And we went pretty much halfway to the one up there, halfway to the Fibonacci up there at 74K. That's why 74K was such a significant resistance for us, because we couldn't break it in 2021. So it took us a long time in 2024 to break it. Like, it took us a very long time. And so, yeah, it was all the way from, what was that, like March all the way to November, and then we finally broke it. So right now what we're looking at is another attempt at this, but we will try to break 119K this time. So we might break that and then end up going to like 130 to 135, somewhere around there at the highest. And then we might have a huge pullback after that. And this is what I've been talking about for a while. I've been trying to tell people, like, look, my Bitcoin videos, I've been explaining this. It does look a little bit bullish for now, but very bearish once we get all the way up to our new all-time highs. Very bearish. So people, you definitely want to watch out. Now, as of the reversal to the upside, looking at the 4-hour chart, definitely looks like it needs a reversal to the upside. So look at this. Boom. This reversal to the upside is ready to happen. The MACD is definitely starting to lean more to the bullish side on the 4-hour chart, that is. And then the RSI looks like it's about to cross and start going back upwards on the 4-hour chart as well. And then we got 30-minute chart over here. Definitely looks like some bullish movement coming in for the MACD, as you can see there. And then the RSI doing its thing still. And then we can also come over here to a smaller chart, 15-minute. It's a little bit different, but you can still see all of that bullish movement right there on the MACD. It almost seems like it wants to become more bullish. It's coming up. So we're leaving that oversold, not even oversold territory, but we're leaving that bearish sold territory, right? We're trying to get that bullish territory back in. So yeah, I think we're going to have some good numbers here. And obviously I showed you guys the daily chart. This is the weekly chart. The weekly chart is printing up one little green candlestick here for the MACD. And you can also see the MACD curving upwards here. So we are actually going into like another bullish pump. And you can actually also see on the RSI how it's doing that as well. Now, there is always the possibility that I could just put out one or two little green candlesticks like how I did back here, and then more selling can come. But usually that selling is not great, and it just is not a lot of selling, and it just ends up blowing everything out of proportion and just going crazy. So what I'm really looking at here, even for the weekly chart, it definitely still looks very bullish here. Yeah, we got a red candlestick, but if you also look at the channel we're in, channel still looks bullish. Looking here at the monthly chart, things are still bullish, definitely oversold on the monthly. And this is where the crash comes. And this is what I'm trying to talk about. Like, looking at the monthly chart, yeah, we should be pumping one more nice time up to 119 to about 135K, somewhere around there. But after that, we are going to get a huge crash. And I've been telling people this over and over again. This huge crash is going to bring us to our previous support levels all the way down here. So I personally believe 74K to 58K could be that level. Even pushing 44 if it's really that bad, but I don't think it's going to be that bad. And I already did a video explaining why I see it this way, because I went and ran the numbers back here, and almost every single bull market or almost every single bear market went down about the same percentage amount. So that's why I was like, look, they all went down almost the same percent. So I went ahead and did that. And like, if you look at the 2021 bear market, this went down. It was like 75 or something percent. I don't have the exact number because I'm just not. I had it on a different video I did, but right now I'm not gonna do all that again. You can watch that video that I did before, and if you look over here, around the same, about 80%. So 75, 80% is typical of a bear market. So I did the math again, and I was like, look, if we were to do that, let's go back to the daily chart. If we were to do something like that, it would be very, 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 very similar. And that's why I came all the way up here and I was like, okay, let's just hypothetically say that we came from about 130K, right? We come all the way up here from like 130, 135 is what I really like to look at. And then we go all the way down to 44K. That's what, 65% down. Now we have a lot more people that will buy the dip, so it might not go that low. So that's also something that you gotta pay attention to. And if it were to go down 70% from 130K, then it would be a 70% drop. And that is about the same as the last two drops. So that's why I'm telling people, like, we could see a nasty drop coming up here very soon. Now let's say that the price got higher. Let's take a look at this. So boom. Let's say the price gets all the way up to 150K. Price gets all the way up to 150K, then boom, we go down to this support here at 44K. That's 70% drop. If we're going by the last one, then you can also see, take this, and then you go all the way down here, boom, and then you see what, 75%. So if we're going by this bear market, then hypothetically speaking, we could get up to like 150K possibly, and then have a huge major crash that just completely kills everything off. Now, let's say 135K. I still think about 119 to 130K is more realistic for this run, but that's me personally. So let me know what you guys think about that. Do you think we'll get to 130K, or do you think we'll get to 119K? I think anywhere between there is good, but I think when you get up to like the 150Ks for this run, that's when you start pushing it. Like, you're really pushing it at that point. All right. Now, a deeper dive is what they're saying here. The first of those metrics is weekly RSI, which is exhibiting 3 strikes of bearish divergence from March 2024, December 2024, and May 2025. RSI is an indicator, blah, 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 that compares average gains with average losses over a set period. to gauge potentially overbought or oversold conditions. We kind of already went over that. Bearish divergence is where RSI is trending to the downside while price is trending to the upside. And that's pretty much what I explained here. Didn't explain the technical terms. But yes, bearish divergence, boom. So what we want to look at here also is down here. So this coupled with trading volumes that are lower compared to initial move above 100K. We have seen lower trading volumes, yet we've seen Bitcoin still rising. Like these were high trading volumes back here, which had us shooting all the way up. But now you can see these trading volumes are low, but we're still increasing in price, indicating that there isn't as much selling. There's a lot of buying inside of Bitcoin. So this is good to see, definitely. But one huge sell can just take us down a lot, and it could just bring us down, one huge sell. So you definitely want to be careful. Now, they said, like in 2021, open interest is always diverging from price action. Currently, open interest at 13% lower than the initial drive to 109K in January, while price is just 5.8% lower. 4 years ago, when Bitcoin hit 69K, open interest was 15.6K or 15.6% lower than the initial 65K high, despite the price being 6.6% higher. So what does this mean? So the similarities with 2021 are clear, but it's worth noting that the crypto market structure is entirely different than 4 years ago, mostly thanks to Michael Saylor's strategy and growing number of corporate copycats ramping up Bitcoin acquisitions at any cost. So a lot of companies have been buying Bitcoin. Every single dip they buy. Every single dip they buy. This pretty much means that this time when we have this double top, this time when we pretty much have our bear market, it's not going to last for as long, and it's not going to go down as much. Which is why I'm like, maybe we're not going to go all the way up to 150K. This is why I say, like, it's kind of good to just think of this as 130K going down to, like, at the most this 44K range. Because remember, it was like 75% for that last bear market, and then it was like 80% for the one before that. So if we're looking at it as that, this is about 10% lower or 10% better, right? Because we go from 80% to 75%. That's a 5% difference in the two bull markets. And now we're going from 75% to 65%. That's a 10% in the bull markets. And then the next bull market might be from 65% to 50%. That'll be a 15% in the bull markets. And every time it just changes because, people are buying the dips even harder. People are making sure, like, these different companies like Michael Saylor's MicroStrategy thing, like he buys every single dip on Bitcoin with billions of dollars. We see a bunch of these companies doing the same thing with billions of dollars, just pouring it into the market, trying to keep getting every single discount that they can on Bitcoin because they have so much faith and so much conviction in it. So yeah, this is definitely a possibility here. It's definitely something that's worth looking at. So we'll have to see. Now, this is what they're saying. Like I said, 150K, that's what I think is like the most. But some people say 200K at the most. I say no. 119 to about 130K, 150K at the very most. But they're saying 200. So let's see. Let's read this. Now, what the indicators do suggest is that while a new record high could be formed like in 2021, the momentum of this move is waning, and analysts who are boldly calling for 150K or even 200K price targets could be in for a rude awakening once the sell-off truly begins. Bitcoin entered more than a one-year bear market at the end of 2021, resulting in substantial layoffs across the industry, like I already mentioned before. Now, this is what I think. Now, also, they said over here, this time around the market has several other elements to consider if price has been getting a tumble, notably MicroStrategy's leveraged Bitcoin positions, the emerging Bitcoin DeFi industry that has $6.3 billion in total value locked, and the billions of frothy dollars that bounce around the meme coin ecosystem, which is known to disproportionately contract during times of market pressure. Now, what I'm noticing here, a lot of people are talking about 150K to 200K Bitcoin. Typically, markets don't do what you expect them to do. Everyone is expecting 150K to 200K. But me, I'm looking at the technicals. I'm not going off of like emotions. Like emotionally, people are like, yeah, it's going to get all the way out there. Now, this is our next Fibonacci retracement, right? This is our next Fibonacci. So it's going to take a pretty long time to get up there to our next Fibonacci. Let's just kind of compare it to our previous runs. So if we just go back here first and we look at the run that we had all the way back here inside of 2017, like we peaked out at 19K, tried to get the 20K, got rejected, right? And then we went into a long bear market. And it was only so long because not much money was flowing in Bitcoin as it is now. And then you've seen this where we just went absolutely crazy. We broke this level 1, 2, 3, 4. We broke 4 total Fibonacci levels, right? And then boom, now we're dropping, now we're back down. Look at what we're doing now. 1, 2, 3, 4, 5, 6. This is going to make 6 full Fibonacci retracement levels broken. These are 6 key levels being broken. If you think about where we, how much we were actually like increased by, look at this. From here all the way to where we are now is 535% in Bitcoin. Bitcoin is already up 530% for this bull market. Let me say that again. Listen closely. For this bull market alone, Bitcoin is up 530%. Just look at this. We have been in a bull market since January 2023. Since January 1st, 2023, we have been in a Bitcoin bull market. That is 2 years. We have been in a bull market for 2 years. I want you guys to hear this and understand this. 2 years we have been in a bull market. If we get all the way up to 119K, we're now at 600% up since the lows, since the bottom of the last bull market. If we get to 130K, we are at 660% up from our lows from the last bull market. From the last bear market. So if you think about it, 660%, that's probably where we're going to like just completely fall out at, just completely be gone. Like we've been going strong so far. Like we're literally 900 days in. We're just about 900 days in to this bull market. Let me say that again. We've been in a bull market for 900 days. 900 days. And people are like, no, it's going to keep running. It's going to keep running. No, we're about to have a major crash. That's what we're about to have. Now, when and how high is it going to get before that major crash? That's a good question. But like I said, 130K at the most, 150K. But even when you try to stretch this out to 150K, look at that. Like that's ridiculous. That's 780% in gains. Like we're already high inside of gains now. We're already at like 540 in gains now. Like, but think about it if it goes higher. So that's why I say anywhere between 119K and 130K is a little bit too vague. If I'm like 100 all the way up to 150 or 150K at the very most. So that's what I would be looking at now. So yeah, people are about to have a rude awakening. And yeah, a lot of people think that we're going to keep running and running. We're just never going to go down. Like it doesn't happen like that at all. And the price targets that some people are talking about, absolutely ridiculous price targets. Like some people are like, we're going to do 500K this run. We're going to do a $1 million Bitcoin this run. Like it doesn't work like that. Like where's the money coming from? Who's putting the money in for it to go up that high? All right. Definitely probably going to end up seeing new all-time highs. But after these new all-time highs, which I'm really banking on this 119K getting rejected at our Fibonacci and having a major crash. But personally, I think we need to get higher for this crash to be significant. Like for this crash to really mean something, I really believe we need to get to at least 130K. Like we need to get a little bit above the Fibonacci so it can trick people. And I know it sounds bad, but we need a bear trap for this to really be a significant crash. Like we need this bear trap, right? We need the trap, or we need a bull trap. Sorry, not a bear trap. We need a bull trap, right? And the same thing that happened here. People didn't think it was going to be a double top because it kept going. It went 5% above the previous top. So they're like, no, if it's a double top, it has to be exactly at the same price. It does not need to be exactly at the same price for a double top, but people think it does. So no, they're like, no, this is a Head and Shoulders, like, and they're like, this isn't no double top. But no, look, it does not have to be at the same price. So in order for this crash to be significant, we need to trick the bulls. The bulls are going to end up getting tricked up here around, if we keep going up above 119K, 130 to 150K, they're going to get tricked. They're going to think it's going to keep running to 200K, but little do they know, a major crash is going to happen. First, it's going to go back down to like 119K. Then it's going to go back up to like 130, and they're going to be like, oh, it's going to keep running. No, 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 no. Look at this. Then from there, it'll end up going to 109, try to get back above 119, get rejected, go all the way down to 199, and probably eventually down all the way down here to 88. And then it'll try to get past 108K, and then it'll fail. But people will see that it gets above 100K, and they'll be like, oh, yeah, we're above 100K. We're going to keep going. We're going to keep running. But little do they know, this is not going to happen. They're going to get rejected again, and then they're going down to 74K. And then it's going to try to get back above this 100K level. It's going to get rejected again. And it's probably going to end up going down to 58K. And then when it goes down to 58K, then it's really going to trick people. Then people are really going to be tripped up. Because from 58K, this is all speculation. Mind you, all speculation. And then from 58K, I believe people are really going to get tripped up because they're going to think that this is the bottom because we stayed in this range for so long. And this was the top for 2021. So since we stayed in this range for so long and we topped out in 2021 in this same Fibonacci range, people are going to be like, yeah, this is definitely the bottom because 58K from there, it might just run all the way up to 108K and trick people. Might even run up to 119K and really, really trick people. And then another major crash, boom, 58, so 40. It maybe not go all the way up to 119. Maybe it goes up to like 80K or 90K from 58 or something like that. But still, like I said, I mentioned this in a lot of videos. I think 44 to 45K is going to be the bottom of this next bear market. So about 44 to 45K is going to be this Fibonacci right here. That's going to be the end of the bear market, in my personal opinion. Just running numbers because I ran these numbers multiple times and I made sure I'm running them right. And hey, when you do the comparison to the previous drops and the previous bear markets, they usually come down the same, not the same percentages, but it changes every single year. Every single year, the percentages drop little by little. And I ran this multiple times, and I ran it even earlier in this video. But if you missed it, look, from here all the way down to here, what was that, like 80%? So we had 80% at the 2017 bear market. We went down 80%. And then over here in the 2021 bear market, we went down 75%, right? And then in this bear market, we're going to be going down anywhere from 65 to 70%. And when you run the numbers, when you go down 65 to 70% from around 130, because we're going to probably get a little bit above that Fibonacci. When you run the numbers and you go all the way down to, 45K, that's 65%. The numbers change periodically for every single bear market because more money's in the market, more people are buying the dips, there's more billionaires, there's more millionaires. So what we're seeing, there was a 5% difference between 2017 and 2021 bear market. So over here in 2017, this was the 5% difference from here to here, 5% difference. So this is 80% right here. And this right here is 75%. And now here, we're seeing a bigger difference. We're seeing now a 10% difference because now it's a little bit different. Now there's more money flowing in the market. So between this area, we're going to have that 10% difference. So this is going to be going from 75% that we've seen here. This was a 75% bear market. We went down 75%. And then this here is going to be the 10% difference because it goes from 5 to 10. It increases. Well, it technically decreases, right? It decreases by 10%. So now instead of being 75% that we dropped in our bear market, we should be dropping by 10%. And now we'll see that 65% right there. So instead of dropping 80%, we then drop, or instead of dropping 75% here, we then drop 65%, which is a 10% difference between those bear markets. So very simple concept. That's how I came up with my numbers for this bear market. So yeah, we're going to go down about 65% from 130K. If we max out at 130K, we should be going down 65% from 130K, which will be 45K, which just so happens to be right at that Fibonacci right here. So this is a very significant level. So yeah, I'll keep you all updated on this, but hey, things are not going to be too pretty for people who are expecting it to go to 500K, because I think it's kind of crazy to think it's going to go up to 500K. But anyways, it is what it is. Let me know what you guys think. Remember, I'm not a financial advisor, and none of this is financial advice. Let me know what you guys think about this in the comment section. Hit the like button and subscribe, all that good stuff. And as always, I'll be back with another video.